Well, hey there, Dallas Fort Worth. In this month's real estate market update, we have a lot of news to cover. And of course, we are going to get into those local market numbers. So let's get started. Now, one headline from USA Today really caught my eye, and it said existing home sales hit a 29-year low in 2024. And they referenced a National Association of Realtors report. Only 4.06 million homes were sold in 24. And that is a steep drop from the 6.1 million we saw back in 2021. And actually, this is the third year in a row we've seen declining sales. 3 years in a row. What is driving this downturn? Well, the common thread seems to be affordability. The combination of high mortgage rates and still high home prices is putting homeownership out of reach for a lot of people. So what does this mean for someone who might be thinking about buying a home in this kind of market? Well, it's a bit of a mixed bag. On one hand, fewer buyers means less competition for the buyers who are out there, which could be good. But of course, those high mortgage rates are still a real hurdle. Even a small change in the rate can make a big difference in your monthly payments. And while it sounds like affordability is really the name of the game right now, there's something many of us just don't quite understand. If sales are down, why are prices still going up? And this article mentioned that the median home sales price hit a record high in 2024. Now, how does that work out? Yeah, it might seem counterintuitive, but it really does come down to basic supply and demand. And while inventory levels in Dallas-Fort Worth have increased substantially, it's still low enough in many areas to allow sellers to continue pushing their prices. You know, it's just a classic case of supply driving up costs. So even though fewer people are buying, the ones who are buying are paying top dollar. And you know, the numbers really illustrate that. The article highlights that in December of 2024, the median home, that's the price right in the middle of all the homes sold, was up 6% compared to December of the previous year. So we've got a market where sales are down, prices are up, and the future is uncertain. Sounds a little bit like a roller coaster. And speaking of ups and downs, let's talk about mortgage rates. Now, the latest report from the Mortgage Bankers Association says that mortgage rates are hovering around 7% as we start out 2025. And they point out that this 7% number is a real psychological barrier for a lot of buyers. And the MBA found that applications for a mortgage are just up 2% from 1 year ago. But even with all this talk about high rates and low sales, the article did mention a little bit of a silver lining. They said that home sales actually ticked up a bit towards the end of 2024. Sales grew 9.3% in December compared to the previous year. So we've got a sense of the national picture here. Some uncertainty, but maybe a few glimmers of hope. But let's talk about the Dallas-Fort Worth area. And Dallas, and really Texas overall, is a fascinating case study right now because it is experiencing explosive growth, but also facing some serious growing pains. Salina, Texas was the fastest growing city in the entire country from 2022 to 23. And now building permits are up 17% year over year, which indicates a huge amount of new construction and development will probably hit the market this year. But there's a flip side to this boom. Another article from the Dallas Business Journal talked about the city of Princeton, which has actually hit the pause button on new residential construction. They have extended a moratorium on new building permits. Their infrastructure simply cannot keep up with the influx of new residents. The water and wastewater systems are strained, the roads are congested, and even public safety services are stretched thin. So it's like they're growing too fast for their own good. And this highlights a critical issue that's not really unique to Texas. We're seeing this tension between growth and infrastructure capacity play out all across the country. And as someone who might be considering buying a home, it's important to think about the state of the infrastructure in the area where you're looking to buy. Can it handle more growth, or are you going to run into some problems down the line? It's not just about the house itself, it's about the whole community and whether it can support the influx of new residents. So we've got this booming growth in some parts of Texas, but also these infrastructure concerns popping up. And on a different note, the luxury market in Texas seems to be thriving. There has been a significant surge in million-dollar home sales, especially in the Dallas-Fort Worth area. While some buyers are struggling with affordability, it seems like the high-end market is relatively unfazed by all this volatility. Well, one factor is that wealthy buyers are often less reliant on mortgages. They may be able to purchase properties outright or secure financing with some more favorable terms. And for them, rising interest rates might not be as much of a deterrent. So we're seeing this kind of economic divide play out in the housing market as well. It's a tale of two markets, one struggling with affordability and another that seems to be operating in a different world altogether. And to continue the conversation on development, a massive new community is being developed by Lennar in Fairview, Texas. It's called Ranchland. It's planned to have over 4,000 homes along with apartments and townhomes. 4,000. That is like building a whole town. And it shows that developers still have a lot of confidence in the Texas market and the North Texas market specifically, even with the infrastructure concerns we were just talking about. Now let's shift gears a little bit and go back to that USA Today article that I talked about in the beginning about how home sales picked up towards the end of 2024. Now, could that be a sign that the market is turning the corner, or is it just a temporary blip on the radar? Well, as with most things in real estate, it is not a simple answer. There are a few possible explanations here. One is that buyers are finally starting to adjust to this new normal of higher interest rates. Remember, we were in a period of historically low rates for several years, so this shift has been a bit of a shock to the system. Now we're having to recalibrate our expectations. And over time, buyers may become more comfortable with these higher rates, especially if they believe that rates aren't going to drop significantly anytime soon. So some of this recent activity could be driven by buyers who are accepting this new reality and deciding to jump back in the market. So that's our look at the news. But what does the data say? Let's take a look at single-family home sales for the entire MLS. So that's our North Texas area. And this is looking at sales from December. So let's start with that median sales price for residential homes. In December 2024, it was $378,000. Now that is a 3.6 jump from last year, which on the surface, it sounds like things are still really hot, but the pace is definitely moderating compared to what we've seen. And speaking of things changing, it looks like buyers at least have a lot more to choose from now by a pretty significant 21.5%, meaning we have more homes for sale than we had this time last year by a bunch. And we currently have 36,467 homes for sale on our MLS. Now, new listings also saw an increase from last year. They were up 11% to 9,326 new listings. So what does this shift in supply mean for anyone out there who is, maybe house hunting right now? Well, more inventory and new listings generally indicate a move towards a more balanced market, which is good news for buyers. You have choices now, and you have less pressure to jump on that first house you see. Buyers have some breathing room to negotiate, and they don't need to waive contingencies like they once did. But what about sellers? Does this mean things are going to be a bit trickier for them? Well, I think for sellers, it does require maybe a bit of a mindset shift. Sellers will likely face more competition, meaning they need to be strategic about pricing their homes to make them stand out and attract those buyers, especially in communities where resale homes are competing with new construction. Overpricing in a market with more inventory could lead to a property just sitting there because buyers have more choices now, so they can be a little bit pickier. Now back to the data. Let's move on to price per square foot. It inched up just slightly by 0.5%, reaching $188 a square foot. And this is in line with that overall trend of moderate price growth. That small increase in price per square foot really just reinforces what we're seeing with that median sales price. Home values are still going up, but just at a little more measured pace. All right, so here's where things get kind of interesting. Pending sales actually dipped by 3.1%. Days on market jumped considerably by 27.8% to 46 days on the market now. So for those of you who don't, live and breathe real estate every day, what's the story that these numbers are telling us? So that decrease in pending sales suggests that buyers might be taking a more cautious approach to the market right now. They're waiting for the right opportunity or being more selective with their choices. With more inventory available, they don't really feel that urgency to make a quick decision. Buyers are also just being more discerning now that they have more options, and sellers might need to adjust their pricing strategies to really match buyer expectations in this more balanced market. It's a little bit of a waiting game now for sellers, but it's not all doom and gloom. No, not at all. Let's take a look at those closed sales. They actually jumped up by 13.6% to reach 8,890 homes sold, and the sales to list price ratio remained relatively stable at 95.6%, just a tiny dip of 0.3% from the previous year. Now let's talk about that months of supply figure. currently at 3.9 months, which is a 21.9% increase from last year. A balanced market typically has somewhere between 4 and 6 months of supply. And that current months of supply figure indicates that the North Texas real estate market is getting close to that balanced state. Now, that metric tells us how long it would take to sell all the current inventory at the current pace of sales today. So a higher number favors buyers, while a lower number favors sellers. So as a bit of a recap, we've seen rising prices, albeit at a slower pace, increasing inventory, giving buyers more options, longer selling times, requiring sellers to be more strategic, and that all-important months of supply figure suggesting we're approaching a balanced market. Now, what does all this mean for those thinking about buying and selling in the North Texas area? What's the key takeaway? Well, the takeaway is this. The DFW real estate market is moving towards a more balanced environment. So for buyers, the increase in inventory means you have more choices and potentially more negotiating power. However, it is important to remember that prices are still rising, even if it is at a slower pace. So you don't want to take too long to make your decision. And sellers, you might need to adjust your expectations a little bit. You need to be realistic about pricing your home competitively. I was recently running comps for a client and found 2 listings that had identical floor plans with the same level of upgrades. One just sold, and the other one was a new listing who listed for $100,000 over the other home's price. What? Why? I have no earthly idea, but no appraiser is going to let that slide by. And sellers, you need to be prepared to potentially wait a bit longer to find that right buyer. It's just a new market dynamic. The market is still strong. It's just the game has changed a bit, and it's a game of strategy for everyone involved, whether you're buying or selling. Now, there's something else interesting in the data I want to point out. If you noticed, pending sales were down, but closed sales were up. I think there's a few things that could tell us about the market's momentum right now. 1, it suggests that while some buyers might be hesitant or taking a wait-and-see approach, there's still a healthy number of people ready to make a move. 2, it could indicate a shift in the types of buyers in the market. Like maybe those that were priced out before are now able to jump in. Or perhaps it's buyers who are confident in the long-term value of the DFW market and are willing to ride out any short-term fluctuations. Those closed sales definitely show deals are still happening, even if it's not at the, crazy speed we saw before. All right, so we have covered a lot of ground here today. Rising prices, shifting inventory, days on market, and that crucial months of supply figure. But what about the future of the DFW real estate market? Oh, the crystal ball question, right? Well, I would love to have a crystal ball, but predicting the future is always tricky, especially with something as complex as real estate. But based on the data we've explored today, there are some clues and patterns that might offer some insights into what could lie ahead for the DFW real estate market. First, we have to acknowledge that the overall economic climate plays a huge role in real estate trends. Interest rates, inflation, job growth, all these factors impact people's ability and willingness to buy. Now, the Texas economy has shown remarkable resilience in recent years. It's a diverse economy with strong job growth, which bodes well for the real estate market. We also need to factor in the impact of demographic trends. The DFW area has experienced significant population growth in recent years, and that trend is expected to continue. So more people means more demand for housing, and that sustained population growth could create upward pressure on home prices. And this brings us to another and our final crucial takeaway. Do not try to navigate this real estate market alone. Whether you're buying or selling, having a skilled real estate agent on your side can make all the difference, especially now when the market is in transition and it's not as simple as just riding the wave of a super hot seller's market. And by the way, if we haven't met yet, I'm Jennifer Shannon Templeton. I'm a realtor and broker associate with the Crest Edge Group at Keller Williams Rockwell, and we work with buyers and sellers all over the Dallas-Fort Worth Metroplex. If you're thinking about making a move in 2025, I'd love to be your real estate resource of choice and earn your business. You can call or text me at 214-803-4444 or send an email to jennifer@thecrestedgegroup.com to get started. And if you liked this video, remember to hit that like button, subscribe to the channel for more real estate updates and insights, and check out our next video because staying informed is always the best investment. I'll see you in the next video. Bye.